It's that time of year again. The winter snow is melting, birds are singing, spring is in the air, and the tax man is anxiously awaiting our tax returns. Hi, everybody. I'm Ben Whitehair, your SAG-AFTRA Executive Vice President, and today we're going to be talking all about taxes. And while this subject might be challenging for some of us, well, probably all of us, we have some good news for you. We have enlisted one of the best and brightest of our members to help us navigate through the world of write-offs and exemptions in hopes of letting you take home a little bit more of your hard-earned cash. Welcome to Tax Updates for Entertainment Performers 2023. This has become a go-to annual presentation, and we are delighted to be able to offer this again to our members across the country. Before we get started, I'd like to introduce you to our sign language interpreters, Romina Mena and Mara Basani Santamaria. Today's topic will cover a wealth, pun intended, of information to help you sort through your 2022 taxes before the filing deadline. We're going to cover the four most popular areas that people want to know more about. Updates you should be aware of about your taxes, what you'll need to put together to file your return, how to handle your expenses, and of course, free filing. Some of the resources discussed in today's presentation are available on the SAG-AFTRA website at sagaftra.org/taxprep. That's sagaftra.org/taxprep, which is a general resource we hope that you will find helpful. A quick reminder that SAG-AFTRA is unable to answer individual questions about tax returns, and that those questions should be directed to a professional tax preparer, or you can contact the IRS directly at irs.gov or call 800-829-1040 for information pertaining to your individual situation. All right, let's get this show on the road. Please welcome back Sandra Karas. Sandra is a working actor, a SAG-AFTRA and Actors Equity Association member, a New York local board member, and an alternate to the national board. Sandra is also an attorney in private practice in the areas of tax, estates, trusts, contracts, and business law. And if all of those jobs and titles weren't impressive enough, Sandra is also the Secretary-Treasurer of Actors Equity and serves as the Tax Director of the Volunteer Income Tax Assistance, or VITA, program in New York, where she has been affiliated with VITA as a pro bono preparer and instructor for more than 30 years. Sandra holds licenses in the areas of tax accounting, securities, investments, and law, and is admitted to practice in all New York State courts, as well as the Federal District Court, United States Tax Court, and the United States Supreme Court. Sandra, thank you so much for joining us again this year. I know that there's a lot to talk about, so let's dive in. What is new in this year's tax code? What do our members need to know?
Thank you so much, Ben, and hello, everyone. It's always a pleasure to be here because, as I was telling someone earlier today, I love to give information to my fellow members because I think the better educated we are and the more secure we are about our money and our taxes, just the better lives we live. So I'm here to try and break it down for you so that you can understand it. And it makes sense to those of us in the entertainment industry. Well, what's new? Well, there is a new filing deadline, as there is every year. This year, it's April 18th. I know you think April 15th, but when the 15th falls on either a weekend or a holiday, then it's moved to the next available weekday. And this year, it's April 18th. Those of you who have children know that some of you may have already received child tax credits that the administration sent out in advance, advanced child tax credit to assist members in the recovery, especially with inflation, who have children at home and qualify to claim the child tax credit on their returns. Some people got those payments in advance this year. And so that was new. That has since ceased. There won't be any advanced child tax credits this coming year, but for 2022, we saw those. And of course, we're revisiting digital currency, otherwise known as cryptocurrency, otherwise known as virtual currency. I don't know how many of you dabble in any of this kind of thing, but the IRS is, and Congress wants to know if you have traded any of it, and if so, they want it they want to see it on your tax returns. And you've all heard about those Venmo and PayPal payments that are possibly going to result in your receiving income reporting. Well, that was supposed to happen for the 22 tax year, but the IRS has put it off until next year. So those 1099-K forms are not going to come until the early next year for reporting of $600 or more that you receive from people who pay you for your business services, whatever they may be, either by Venmo, PayPal, or other electronic means. So be prepared for those, keep good records so that you're not surprised when you get those statements next year. Next slide, please. So the filing deadline, as I mentioned, has been extended this year slightly past April 15th to April 18th. That's the due date to file your returns. It's also the due date to pay your taxes. Now, you've heard of extensions, and many of you have utilized them over the years. What the extensions allow you to do is file your returns up to October 15th of this year. What don't they allow you to do? They don't allow you to extend the tax payments to October 15th. So if you want to file an extension, you may certainly do that. But if you believe you owe tax, then you have to get those tax payments in by April 18th. And if you don't know, and many of us don't because our incomes are so unpredictable sometimes, then you can go based off last year and send in some money if you owed tax last year, or you can send in a little more if you had a better year in 2022 than you had in 2021. But the tax is due April 18th, even if your returns are not. And you can do those extension forms online. You can pay online. It's very easy with your federal and your state agencies. But you can also do it on paper. You can print out those forms and mail in a check. Next slide, please. Many of you, and the IRS just yesterday issued guidance on this. So this is really hot off the presses news. Many people got stimulus payments from the federal government after the pandemic, and I think most of us did. Most of us got something or other in 2020 and in 2021. But those stimulus payments ended before 2022. We didn't get those federally. But did we get some in the state? Well, almost 20 states issued economic impact payments, rebates, some of them were called. Some of them were called stimulus payments. Whatever they were called, many states, including California and New York and Illinois and many others, and that's on the slide here, issued these payments to people to assist them with their economic situation. And the IRS was going to figure out how to tax all these payments. And then they just decided yesterday that probably the vast majority of these payments are not going to be considered taxable income. So you can go ahead and file your taxes and probably not be affected by any additional reporting that you have to do. In other words, you got free money, it was from your state, and you should enjoy it and use it for the your expenses as you needed to. Next slide, please. And we talked about the advanced child tax credit. Last year's child tax credits were very high. They ranged from $3,000 to $3,600, and that amount was lowered to a maximum of $2,000 for any qualifying child that you have in the home. And there are some income limits on this. If you are married filing jointly and your income exceeds $400,000, you're not going to enjoy this child tax credit on this year's tax return. And all other filers, single people, head of household, married filing separately, your income threshold is $200,000. So what does this mean for people who got the advanced credit this year? Well, it's like getting money ahead of time to help you out. And then when you file your tax return, you'll calculate what your child tax credit is. If you've already received it, you'll come out a wash, zero. But if you didn't receive enough, you'll get some extra. And so you'll reconcile your advanced child tax credits on your current tax returns that you're filing for 2022. And it's not going to be a difficult thing to do, but just know that that's something that you're going to be reporting to your tax preparer. Next slide, please. And we talked very, very briefly about this, but I just want to reiterate that those of you who dabble in digital or cryptocurrency, if you have any gains, if you do any trading, buying and selling of these, you have to report it. You also have to answer a question on your tax return about whether or not you own and trade digital currency. And for those of you who have never heard of this before, some of the examples are Bitcoin, Ethereum, Ripple, Litecoin, Polkadot. There are lots of others out there, but you know who you are if you own digital currency. Next slide, please. So what do I need to give my tax preparer? Well, in the next slide, we should be able to, yes, that's what I call the information checklist. And it looks like it's formatted great. Oh, good. So this is what I call my organizer. It's one page, one side of one page, 2 columns. And if it's not on this, it probably doesn't affect your tax returns. That's not to say that it has every single possible entry that could ever be made on a tax return. But I found over the years, and I update these worksheets every year, that this is a pretty good rundown of what you need to give your tax preparer. And it's also a good checklist for you. If you go through both columns and you've organized all of your records according to these categories, you'll be ready to roll. So let's look at them briefly. The left-hand column is all the kinds of income that you could report. Now you'll notice that there are all kinds of little messages to people who come in the volunteer income tax assistance office. In our New York office, we have opened last week at VITA in New York, and this is our 47th season of serving our fellow members of SAG-AFTRA and Actors Equity Association to provide free tax returns. We are all volunteers and we are fellow members. And I'm proud to be associated with it. I run the program as tax director, and we have Mike Lesser, who serves as our site coordinator, and he organizes all the scheduling of people and the volunteers. And we are looking forward to another robust season. And so these worksheets that we're working with today are the ones that are on the website, sagaftra.org or actorsequity.org. And you can go on the website and print out all of the worksheets that we use in the VITA office. For the purposes of today's workshop, we're only going to use the ones that organize your tax records and talk about what's deductible. We're not going to go through all the IRS ones. So yes, they have page numbers at the bottom, but just ignore those and ignore the little messages that we're giving to the members who come in to visit our site. So let's start with income W-2 forms. Well, W-2 forms are for wages. If you work as an employee, you're going to get your W-2s and you want to make sure that you have all of them. Well, how do you make sure that you have all of your W-2s when they start coming in January and early February? You should be keeping track all year. And if you didn't have this habit before, you can start it now. Create a little ledger for yourself or some kind of a file that you keep on your computer to keep track of the employers you've worked for or the income that you're getting from employers you've worked for before, but from whom you're now getting residuals. I mean, I get a lot of W-2s every year, and some of them are jobs I did more than 30 years ago. Really, I mean, there's some films that I'm still getting paid on, on all kinds of things. And, you know the same thing, you get residuals, but we also get W-2s from the jobs that we worked in the prior year, of course. So keep track of all those and save your most recent pay stub, your last pay stub, because then if you have all your pay stubs and you have some kind of a list of the income that you collected last year and who paid it, then you're going to know how many W-2s you're looking for this year. It could be 3 or 4. It could be 12 or 15. I've done tax returns with as many as 29 W-2s for someone. So, you know, don't scoff at keeping good records, because you could be one of these people that gets more than 10 W-2s all of a sudden, and you know, your head's spinning. Let's look at all the 1099 forms. You know what these are pretty much. But the first one is 1099 int, stands for interest. If you earned $10 or more in interest from a bank account, a brokerage account that has interest-bearing funds, a credit union, then you will get a form, a 1099 int, sent to you. If it's less than $10, you won't get it because they don't have to send it. But do you have to report it? Yes, you have to report it anyway, even if it's $7, whatever it is, you know, include it with the information you give to your tax preparer or that you organize for yourself. 1099 div is the same thing. Dividends, however, and this is income that is thrown off from your investment assets. If you have mutual funds, stocks, bonds, and other investment securities, you will that earn dividends. And most of you reinvest those dividends back into the securities. Some of you take them out as income because that's why you've invested in this particular mutual fund or stock. You will, excuse me, you will be looking for the 1099 div for any amounts over $10 and any amounts under $10. You'll just keep track of. 1099C, for those of you who negotiated with a creditor. Say you spent some money on your Visa card or your MasterCard or at Macy's and you have a charge card there or whatever, and you've gotten to the point where you feel pressed and you might not be able to pay all of it, and you negotiate a lower amount. So you owed $3,500, you negotiate it down to $15,000. They've forgiven $2,000 of your debt. Very often, most often, you will get a reporting of that cancellation of debt, and that $2,000 becomes taxable income. I know it's a big surprise. Most people say, well, good, they forgave the debt, I can forget about it. Not necessarily. So please be aware that if you do negotiate that, contact a tax advisor or call us at VITA, and we'll be happy to help you figure out what you need to do about that. 1099G stands for government. Those of you who collected unemployment compensation over the last few years, and many of us did. And thank goodness for the advocacy of SAG-AFTRA in the mixed earner pandemic unemployment benefits, because we not only were able to collect unemployment on the jobs that we had been laid off from, but on self-employment that we could no longer pursue at the moment because of the pandemic. Now that's rare, that no longer exists, but during that period that existed for about a year between 2020 and 2021, we were able to file unemployment benefits on both wages and self-employment. It was called mixed earner pandemic unemployment benefits. So while those don't exist today, we still get those 1099Gs for any unemployment compensation that we got last year from being laid off from a W-2 job. And we also see sometimes state tax refunds being reported on a 1099G. The state that you got a refund from sometimes sends you a document that says, this is how much your refund was last year. Give that to your tax preparer. 1099B stands for broker and barter. This is the document that you get from your investment company or your brokerage to tell you what you sold last year and how much you made. And you think, oh yeah, that's right. I traded a bunch of securities, I took a distribution out of my, my investment account for some reason. I just needed the extra money. I needed $5,000, and I told my advisor, just sell some stuff and give me the $5,000. Well, this year you're going to get a 1099-B that says you had proceeds of $5,000. Is all of that taxable? Not necessarily. What your broker is supposed to do is say how much you invested in that particular account, and the difference between your investment, also known as a cost basis, and what the proceeds were becomes the taxable income, or you might have had a taxable loss, which you can take to reduce your other income. I know I'm getting a little bit in the weeds here, but I just want those of you who had to take money out of investment accounts to be aware of that. 1099 miscellaneous, this used to be the one where we reported our self-employment. And well, guess what? A couple of years ago, they said, no, we just want to complicate things a little more. We're going to create yet another form for this. So now the 1099 miscellaneous is only for royalties, rental income, and some other obscure income that I'm sure you don't earn. The next form, the 1099 NEC, non-employee compensation, is where we now see our self-employed efforts, our independent contractor income. Those of you who do recorded books, who do print work, who do some workshops, one-offs, you'll see these NEC forms, and you probably saw them last year as well, but they're still kind of a new form. So I just want to call your attention to it. And you'll get it not just for showbiz independent contractor work, but for others. If you do web hosting, if you are a dog walker, if you have a small business of your own that is a parallel business to your showbiz life, you might get a 1099-C from those payers as well. 1099-R are for people who take money out in retirement. It can be from your pension. Thank goodness for our union pensions. It can be from that. It can be from taking money out of a 401k. If you have one from leaving a job, an IRA, if you rolled money over into an individual retirement arrangement, it could be from a Roth. So those of you who do this and have this kind of income, you know that you're going to get this 1099-R for retirement. And the last one is SSA. That stands for Social Security Administration. Those of you who are collecting Social Security benefits get that pink and white form every year. And it's an important form to include with your tax organization. If you receive alimony, you have to report that as taxable income. Now, this is not child support. We don't see this very often at VITA, but there are still some people out there who have alimony arrangements and they still have to report it as taxable income. If you do some election inspector, you work the polls, you're going to get some money from the government. If you sit on a jury, you're going to get some money from the government. If you win the lottery, you're going to get documentation and so on. So we add these things here: prize winnings, lottery, jury pay, election pay, and so on. It's all taxable income. All of it is. So, just because you're doing your civic duty doesn't mean you don't have to pay tax on that $40, whatever it is. And sometimes scholarships, awards, and honoraria are taxable. But for most people who attend college, scholarships are not taxable because they are spent on college. And then any other income that I haven't mentioned here, don't forget to organize that and bring it with you. We ask about direct deposit for your bank accounts because that's the fastest, most secure way to receive your refunds, and we encourage it. On the right side of the ledger, we've got expenses that you can claim on your tax returns, including medical and dental insurance premiums. For those of you who buy your medical insurance on the marketplace, the Affordable Care Act had more participants last year than ever. So it is a very desirable program, and it is one that has really put a lot of people in a much more secure position because they can buy affordable healthcare premiums, insurance for themselves and their family. And if you did buy on the marketplace, you're going to get that 1095-A form. That information has to go on your tax return. If you have long-term care insurance, please be sure and organize that for your taxes and tell your preparer. And then anything out of pocket, co-pays, things that are just simply not covered by your insurance, that are necessary, or you're still in your deductible levels, all of that will be considered part of your medical expenses. And you might be able to deduct all of them if they exceed 7.5% of your total income. And they're part of this itemized deduction schedule that most of us don't really use anymore because of the higher standard deductions. But you know, we'll talk more about that later. Charitable contributions by cash, check, or credit card, by goods donated. Make sure you, make sure you organize those. Mortgage interest and property taxes if you own your own property, and it can be more than one property for real property taxes. Child and dependent care costs if you pay to care for a disabled parent or other family member, or you have another dependent in your house, or if you pay to have your children cared for. Alimony paid. Well, you remember the person who had to report it as income? The person who pays it gets to deduct it on the tax return. And then if you if you fund your own retirement plan, we need to know about that too, be it an IRA, a Roth, a self-employed pension. We do ask about total rent paid because many states offer renters credits for those who have modest incomes. Business and auto expenses we'll get to, travel expenses we'll get to, expenses related to investment income. Some of you pay a broker or an advisor to manage your investments every year, and to the extent that you do, these may become deductible expenses. If you are somebody who has attended college in the last couple of years and you still are receiving reports of the tuition you paid and the scholarships you got and so on, you may be eligible for valuable college credits. So bring that information in. For those of you who are already out of college but still paying back student loans, bring that information in as well. Most of these things are sent to you by mail, so that you don't have to go scrounging around to find all these pieces of information and all these amounts. In New York State, we see the funding of a 529 college plan as a deductible expense, but you don't have to be in New York State to fund a college plan for a child or a spouse or someone else. So we like to know how much you've put into those. If you're a gambler, and some people are, you know, you can deduct, you probably already know this, you can deduct your gambling receipts to the extent of your gambling winnings only. So if you win $2,000 in the lottery and you've spent $3,000 playing the lottery, you only get to wipe out the $2,000. You can't take a loss on your gambling. This year we have new electric vehicle and some home energy equipment that are worth valuable credits. So make sure that you tell your tax person about those as well. And if you paid taxes when you filed your tax returns last year to your home state or to any other state in which you have worked or collected residuals, make sure you put those amounts down here because they can also be tax deductible. We have a section here for those of you who pay estimated tax payments, whose income is not subject to a lot of withholding or enough withholding. So if you're primarily self-employed, you probably are paying taxes on a quarterly basis. We ask you to note those here. So we're done with this slide. And I hope that was helpful as an organizer. I know it's a lot of information all at once, but we're going to try and move through this stuff pretty quickly. Next slide, please. So what do I do with these expenses? Next one, please. Well, this is the one that everybody asks us about. And these are the ordinary and necessary business expenses for employees or self-employed individuals. Now, I say the words ordinary and necessary because those are the words in the code. Those are the words that spark a lot of interest when you have an audit. And those are the words that make these expenses tax deductible because they are ordinary to our industry and they are necessary to our industry. And excuse me, because my allergies are getting to me today. So we're going to start at the beginning. We're going to go through again pretty quickly. But I just want to call your attention to these and ask you to organize your records this way if you don't have any other better way to organize your records. I'll just I'll depart here for just 30 seconds to say that I've gotten many calls and emails from professional preparers who say, we wait for your worksheets to come out every year because they're great organizers and we use them in our practice. We always tell our clients, yeah, go to your VITA site. They've got those there. And so, a lot of people like these worksheets. They come in very handy at audits because it's, the organization is right there. We're not guessing at what we can deduct. So accompanist and audition expense. If you pay someone to accompany you, usually it's someone who might play the piano for you, so that you can sing at an audition, but you might have an expense of hiring someone who is a professional stunt person, martial arts person. You might hire someone to do a scene study with you who's a professional dialects person. There could be anything that you might have to pay someone to help you do your audition. And these days, we're doing a lot of them remotely, self-tapes, all that. So bear in mind that if you have to pay someone, that you should get a receipt and save it for your taxes. Advertising and publicity expenses. Well, of course, your website, any new headshots, updating your resume if you pay someone to help you with that, Showfax, IMDb Pro, Actors Access, casting networks, you name it, wherever it exists, if you pay to promote yourself, that's tax deductible. Get the receipts, save the receipts, and keep track of it. Agents, commissions, and managers' fees. This is usually a really easy thing to prove because both of those professional kinds of offices will provide you with a receipt if you ask for one. You don't have to be too laborious about trying to keep track of it. Auto expense we'll get to in a little bit. Coaching, classes, and lessons. This is your continuing education. And the test that the IRS has is, does it maintain or improve your current job skills? Well, these things do. You are entertainment professionals. So if you're taking classes in voice, dance, acting, dialects, martial arts, stunt work, if you can think about it as a class that you need to either be prepared for an audition or when you actually get the job, what you might need to do. I mean, you might have to hire a swimming coach or a diving coach. I doubt very much if you were hired to do this kind of work, they wouldn't have someone on set help you with this. But, you might have found a niche for yourself somewhere, and you might be training in a lot of different areas as a performer. So just be aware that these are all tax deductible. Notice I say no gym memberships. They're not deductible. I don't care what you do there. And if it makes you feel any better, police officers, firefighters, and members of the military can't deduct their gym memberships either. And they might arguably have to stay in better shape than some of the rest of us. But that's for another conversation. So equipment expense. I'm going to call your attention to the bottom of this worksheet to let you know that the IRS wants you to itemize them. So if you got brand new headphones and you got new microphone and you got a new laptop and you got a new tablet and you got a new ring light and a new tripod and all these things, because didn't we all do that? Each one has to be itemized separately. You can't just lump them all together and say, I spent $4,500 on all this stuff. So just be aware of that. There are just a few lines here at the bottom of this, but just use another piece of paper to keep track if you bought more than fill up this space. So then we have gifts for business. If you send people business gifts throughout the year or at holiday time or whatever it is, keep track of those expenses, but be aware that you may only deduct $25 of any gift to any one individual. And that's per annum. So, if you send your agent $100 gift basket at holiday time, you get to deduct $25 of it unless there are at least 4 people in the agency. So I would address it to the agency and not just the agent. But you're free to do as you please with your agent, your manager, a director, a casting person, choreographer, anybody you work with, that you network with and that you like to give gifts to. But be aware of the limitation. Internet expense, we ask for your total internet and we ask for a business percentage of that. And you're thinking to yourself, well, Sandra, what's the business percentage that I should use? Well, it should be the one that applies to you and your work. And I can't tell you the answer. What we see at VITA, I can tell you, is somewhere between 60 and 80%, kind of generally from members, but that doesn't mean that that's you. You could have more than 80% of business use, or you could have less. What the IRS allows when people have these kinds of both business and personal expenses is to keep a log 4 times a year, 1 week in each calendar quarter. This asks you to go to the trouble of doing that, but at least it doesn't ask you to do it every single day of the year. And if you're willing to keep a log, for a week in each calendar quarter, about what your use of your internet access is, either when you're at home working, when you're out and accessing your Wi-Fi, if you have an office space outside your home, whatever it is, just keep track of how much you're doing business. And if you're using a lot of it for personal stuff and, your friends, your family, what have you, apportion that out. And I think you'll find those of us in this industry that we're either doing research, we're looking at casting opportunities, we're doing, going online and reading. We're uploading sides for auditions, any number of things. So keep good track of that. If you're willing to do it 4 times a year, you can probably come up with a very reasonable business percentage that the IRS will accept with those records. Otherwise, they'll probably give you somewhere between 25 and 50%. That's kind of where they default. Makeup and hair care when you're working, and I include doing a new reel, updating your reel if you want to work on something that you don't already have recorded, or when you're getting new headshots. Your makeup, your hair is very important, and if you are paying someone to do that, then you should certainly deduct it. The other thing is, those of you who do background work usually have to do your own makeup and hair. Not always, but very often. So when you get the gig, that's a good time to replenish your kit and, do your highlights and lowlights and, get your hair spruced up and your beard trimmed and whatever it is that you do. But this is a good time to deduct that expense. It's not deductible if you're just auditioning. Just be aware. Office supplies, stationery, and postage goes without saying. If you have anything business related, this is becoming less valuable as we do everything online, but for those of you who do, keep track. If you have to rent studio space or rent equipment to do your self-tapes or to rehearse something, many people who dance have to rent a studio with a sprung floor because you can't do the kind of practice that you need to do in your home because your floor will not give the way it's supposed to. So keep track of all that. If you're going to shoot something for your reel or a self-tape and you rent a studio and equipment to do that, get the receipt for that as well. Repairs and maintenance of your equipment, especially musicians, they are always maintaining their instruments and equipment. And we all need to upgrade our equipment periodically, but if we're just maintaining it or repairing it, keep track of those receipts and deduct that here. Research and miscellaneous supplies. This is just sort of a catch-all for things that you use now and then. You're buying new books, sheet music, you're uploading something in your key so that you can do an audition. you're uploading scripts, that you have to pay for to do, whatever it is, iTunes, earbuds, whatever you are using for your own research and to prepare yourself for auditions is tax deductible there. Stage managers have their own supplies, their own kits. They can deduct blacks, tools, their watches, first aid kits. It depends on how much the employer provides for you and how much you're expected to provide for yourself. Streaming services, again, I added this category this year because they just exploded. So again, try and apportion what your business use is. I belong to a few different streaming services because I have stuff running on some of them, but that doesn't mean I can't deduct parts of other streaming services because I might have to audition for an episodic show or something that's going into a second or third season, and I have to familiarize myself with it. So, be aware of what's out there, keep track of your expense, and take the deduction. Tax prep, legal fees, and professional fees for business. Your telephone expense. If you have two lines, if you have a landline and a cell phone, your cell phone is 100% deductible. Don't worry about it. But if you only have one phone, which is most of us, except me, I have a landline. I know my kids are going, really, mom? Okay. So I don't have to apportion, but you do probably. So again, keep track, keep that 1 week out of the each calendar quarter, or just go to 1 month in each quarter and pull your real bill, your real invoice out for Sprint or Verizon or whatever it is that you subscribe to, and you'll find your business use right on it. So it'll do that bill will do some of the work for you. Tickets for research, if you go to theater, film, concert, dance. I don't know how Netflix got in here, but somehow it did. I don't know. My fingers were typing away. These are only for you, not for your squeeze, not for your nephew, not for your, pals. It's just for you. Now, if you're taking yourself and your agent to something because you want to do that, then we could have a deduction here for both of you. Tips and gratuities for those of you who, want to make sure that on set you are kind to your dresser, your wig person, your makeup person, somebody who goes over and above to give you special attention. Backstage, dressers, wardrobe people, stage door people, you know who you are when you work in these kinds of environments on a regular basis. But even if you do a one-off and you decide to make tips and gratuities, make a note of it somewhere in your calendar. The gig that you did and the person that you gave the gratuity to. Trade pubs, they're all online. Backstage, Variety, Performer Cues, Call Sheet, Variety, everything you can think of that you subscribe to, keep the receipt when you pay for it. Travel expenses we'll get to. Transportation seeking employment. Where I live, we take subways, buses, Uber, Lyft, taxis. And where a lot of you live, or most of you live throughout the country, you're in a car environment. And so we're going to talk about automobile expenses in a moment. But the local transit is deductible if you're using it to look for work, or if you happen to be out of town working and you're catching the local bus or jitney or metro, if you're working in a place that has public transit of some kind. Don't forget your working dues when you deduct union dues and initiation fees. A lot of us forget those working dues and we neglect to deduct them. Don't forget those. And the unions are great about this. If you say, I'd like a letter indicating how many what my total dues were for 2022, and you'll get one. It's, again, don't try to do the heavy lifting if you haven't already done it. Your wardrobe and cleaning of costumes and specialty wear is deductible. Many of you have, physician scrubs that you keep. Many of you have police or fire uniforms that you use on set. All those are tax deductible. Some of you do clown work. That's a costume. And those of you who dance, you know who you are. You've got all your dance wear that's deductible. But notice it says no streetwear. If what you're buying you think is just because, you know, you're in the business and you would never wear this out on the street because I just wear this for commercials or whatever it is. I used to have a whole commercial wardrobe years ago, but it was streetwear and I couldn't deduct it. So we still can't. If there's anything I haven't thought about, some of you have storage where you keep equipment and props and all kinds of things because you have a self-contained act that you take on the road or that you do on a regular basis. You know, deduct that there. Some of you pay special insurance for things. You know, so if you're one of those people, add your additional expenses to this worksheet. Meals for business. You know, if you are out trying to enhance your revenue, as the Internal Revenue Service says, then keep track of what you're spending if you are with someone who can actually get you a job. These are not going out with your peeps after, you know, a wrap, the day's wrap or anything else. This is, you know, someone who is in a position to hire you or to connect you to someone who can hire you. So it could be an assistant choreographer, it could be an AD, it could be a director who knows a director who's on a particular shoot that you're trying to get on, an agent, and anybody who can enhance your revenue. That's this. So we finished with that one. How are we doing on time, everybody? Are we kind of okay?
We're getting close. We got to probably wrap up here. I know we have a few questions, so if we can maybe cruise through some of the remaining pieces here and give people a sense of
good.
Where
I
they
will
can
do
file.
that. I will just have you go to the next slide. This is self-explanatory. If you are out of town overnight, working or looking for work, this worksheet is its own, has its own instructions on it. Make sure that you have an overnight stay. It covers travel, lodging, tips, laundry, local transit, auto rental, and other expense. It also covers meals, and it asks for information that your preparer is going to need. And I think it's self-explanatory. I never spend a lot of time on this one anyway. The next one is your auto expense. And for this year, the auto expenses are divided into two separate sections, January through the end of June and July 1st through the end of December. There are two different rates. January through the end of June is 58.5 cents a business mile, and July through December is 62.5 cents a mile. And they want the information when you started using the car for business, what your total miles were, what your commuting miles were, and that's driving to and from work. Those aren't business miles, those are commutation, and no one gets to deduct those. But your business miles are what? They are looking for work locally or out of town, working out of town where you have to stay overnight and you're taking your own car with you, driving between two jobs on the same day, going to a class or a course, doing research, going to interviews, auditions, go-sees, the union hall, what have you. That's all business. If you have a good diary and you keep track of where you are, what you're doing, and how many miles you drove, then you'll be prepared to claim these deductions when you do your taxes. Notice at the top, the third line down, it says, it starts with the second line down, you must keep accurate contemporaneous mileage records in the event of a tax audit. I can't say that enough, because they will, if you have an automobile audit, they will go through your calendar with you and see how you track your mileage. So you better have a way of tracking it. I know there are apps out there, but so far I haven't found one that imports into your calendar. And if anybody finds one, please let me know. So that's it for these worksheets. I know I went through them very, very quickly. And I'm just going to add a little bit about those of you who work out of your homes. home office deductions. You have to actually generate your income from your home. It can't be a place where you prepare or where you look for work or where you do your self-tapes and your audition prep or you do your research. It's got to be where you're actually being paid to work. And self-employed people tend to use this a little more often than others. But for those of you who do recorded books and you have a home studio, you know who you are. The tests are regular and exclusive use, the principal place of your business. It must be for the convenience of the employer, and you have to be able to verify your business relationship through a contract or an agreement if you're self-employed. Those of you who do, we don't see it very often because most of us work at a place where the employer tells us to show up. Even those of us who are considered self-employed, people who choreograph, music direct, design, and so on, we usually go into the space and do our work, but not all of us. So some of us have this home office deduction. Next slide, please. And then here it tells you what you have to keep track of for your home office deduction. You have to apportion your rent or mortgage interest based and real estate taxes and so on, based on the size of your workspace as compared to the rest of your home. So you have to do that measurement and keep track of that and all of these other expenses. Or if you don't want to bother with that, the IRS says you can take what's called the safe harbor amount, $5 a square foot, and you're done. Just measure your business office space. That's it. Next one, please. Free file. We love free file. Next one. To get started with free filing, for those of you who are intrepid and want to jump right in and do your own returns, and I've talked to a lot of people who have done this. You have to have a copy of last year's tax return. You have to have everybody's social security numbers at hand. And you have to have a valid email address so that they can be in touch with you when everything is filed. Next. So I'm redundant here, but have everything ready to complete your tax filing before you start, including a copy of last year's tax return. Organize your income records as I've outlined them in the information checklist, and that'll be helpful. Organize and complete your expenses and your deductions as I outlined in the checklist and in the other worksheets that we looked at. If you had affordable health care insurance, Affordable Care Act health insurance, I'm backwards here, have your 1095-A handy. And you must know that you are required to file electronically. They will not let you mail these in. So you will have to establish a 5-digit PIN that you make up yourself. It can be whatever 5 digits you want. And if you used Free File last year, you can use last year's PIN. Next. So we talked about this. Make sure that if you've got your health insurance on the marketplace, that you have the form ready to go. Next. And this is, yeah, we couldn't be too redundant with this because you have to start by going to www.irs.gov. Sometimes I take for granted that we all know where that is. And you can, and if you don't have all those things that I mentioned, you can get a transcript of last year's tax return that will show you your adjusted gross income, your AGI. So you can set up a little profile on the IRS and you can go into your own records and find that transcript under self-help tools. Next. Which states don't have income tax? Well, you know, so I guess we're jealous, but Alaska, Florida, Nevada, South Dakota, Texas, Washington, and Wyoming. The rest of us have to file state income taxes. And so we want to make sure that we're ready to file in our states as well. Next. We have assistance here. As mentioned early on this afternoon, sagafter.org/taxprep, www.irs.gov.
Amazing. Amazing. We have time for a couple quick questions. Some of the ones that we hear consistently. Is it necessary to itemize our deductions, or can we just take the standard deduction? Does that change what forms we fill out? You gave us a lot of examples of what we can and can't deduct, but I'm curious what the options are.
Yeah, well, the standard deduction for married filing jointly is $25,900. For single, it's $12,950, and for single and married filing separately. And for head of household, it's a little higher. I think it's about 19,000. So you can see that if your showbiz expenses are not deductible on your federal return, you're probably not going to be itemizing unless you have a house, mortgage interest, property taxes, lots of medical expenses, charitable deductions, and the like. And if you do and you exceed those standard deductions, of course, you may itemize. But I don't want you to be discouraged, because there are many states, and California is included, New York is included, Pennsylvania is included, and there are a few others that will still allow your showbiz expenses to be deducted as miscellaneous itemized deductions, even if you take the federal standard. I'm going to say that again. You file the standard deduction on your federal returns and you think, well, I'm done with this. I can't deduct any of my showbiz expense. Wait a minute. You might be able to. So make sure your tax person knows, or make sure you have organized if you're doing your own, or make sure VITA knows if you're coming into the center, that you might qualify to take your showbiz expenses as tax deductible expenses on your state tax return. And many people have benefited from that since 2017. But of course, as you can see, we're waiting for this PATPA to be passed, because once it is passed, if your incomes are below $200,000, if you're a married filing joint couple, or below $100,000 if you're single, you'll be able to deduct your showbiz expenses against your income and take the standard deduction. So it's going to be great when it happens. But
so if people have questions about their state tax return, where would they reach out for those state tax questions?
You can go online to your home state or any state in which you've worked. If you do a lot of work, say, in another state on a regular basis, some people live in New York, they do a lot of work in California, and vice versa. So it really depends. Some people are shooting in Hawaii, but their home state is California. So look in the states where you do your work, especially your home state, because you're going to have to file there. And go online to your home state's website. And they're pretty easy to find online. And if you don't know what it is, if you don't know all the letters and backslashes, you can just put in California state taxes, and you'll come up with the franchise tax board website. And you can do that for virtually any state. So go in and you can ask to read, you can type in resident tax instructions, and they'll give you all the instructions, non-resident tax instructions, and you'll see all of those as well.
Awesome. Last question. Are the VITA offices going to be open in LA or New York?
Well, the VITA office in New York just opened last week, but unfortunately the VITA office in LA is still closed since the pandemic. I know they're reorganizing a little bit there. I spoke to them just recently at the Entertainment Community Fund in Los Angeles, where they have been providing VITA services for, several years now. And they are not opened yet, and they're not going to open this season. So as far as I know, the only showbiz VITA site is the one in New York right now, but there are regular VITA sites all over the country. So if you want some free tax help and you think things are pretty simple and, you're not too worried about claiming a lot of expenses, or you're retired and, you don't really pursue the business as much as you used to, find out where the Vitus site is near you. And you can, again, type that into a search box, or go to the IRS and just ask Vitus site near me, and you can find one that's close to you. Most of them are not remote, but there are a few remotes. Ours is not remote. We have to see people in person. But there are Vitus sites all over the place.
Amazing. Well, Sandra, thank you so much for this fantastic presentation. So much information and knowledge. On behalf of SAG-AFTRA and all of our members, we deeply appreciate you taking the time out of your schedule to walk us through our tax schedules and letting us know what to expect this year with our tax returns. And as a reminder to everybody watching, you can access tax season resources on the SAG-AFTRA website at sagaftra.org/tax prep. And of course, go ahead and rewatch this recording, share it, subscribe to the channel if you haven't. You can always go back if there's a specific section that you're interested in that you want to make sure you're diving into, that is available to you. On behalf of the team here at SAG-AFTRA, thank you all for watching. We hope you'll join us again in the future. And again, if you haven't already, subscribe to SAG-AFTRA's YouTube channel to get updates on all of the great content that we are posting. Thank you all so much. Have a wonderful day.
Thank you, Ben, and everyone. Good to see you.